it is important to get a wonderful trade entry. And also, it is important to know how to place your stop loss in the market. Placing your stop loss correctly will help you to minimize the amount of money you lose in the market and also help you to maximize your profit. The differences between profitable traders and unprofitable traders is one of the ability to use stop loss correctly or the ability to place stop loss correctly. Let me show you how you should navigate your placement of stop loss in the market whenever you get a trade entry. In this example, we have this low and we have this high. We have this low and a high, and finally a high that broke this low, giving us a market structure shift. Now, some people may like to enter this trade immediately it broke above this high, while others will wait for retracement into this demand zone on an inefficiency, right? In either way you want to enter your trade, that doesn't matter. Now, I will show you how to place your stop loss correctly. What is the most important law that orchestrated the shift of market structure? This is the law, right? This is the law that orchestrated the shift of market structure. So let's assume you enter this trade here, you enter this trade here, whether through breakout or through retracement. Should you place your stop loss here? That is a no. Why? Because placing your stop loss here will double up your losses in the market. And whenever you're placing such kind of large stop loss, tendencies are you may end up lowering your account if trade goes against you multiple times. There's no strategy that is 100% accurate. A lot of profitable traders also find themselves in losing streak. But what makes them to be profitable even after the disaster of losing streaks is their ability to minimize their losses and maximize their profits, right? So after placing your stop loss here, it is assumed that whenever your trade hit your stop loss, your analysis has been invalidated. There's no need to allow your trade to keep trending until it hit your large stop loss and make you to lose a large amount of money without any way of managing or reducing it. This is very bad for your trading career, as in most cases, you may find yourself taking 1, 2, 3 losses before recovering it particular trade. But if the losses are large, it will be hard for you to recover yourself on your drawdown, right? That is important. Well, also, some traders may want to place their stop loss below this low, maybe 1, 2, 3, 4 pips because of spread. That is important because sometimes the trade may end up touching the stop loss with touching the low with 1, 2 pips before moving in your direction. Either way you do it, it is important, but don't double your stop loss large enough to make you not be able to recover it whenever you make a winning trade. This is another example here, right? We have this low, we have this high and a low, and a shift of market structure. And when you enter this trade here at breakout or retracement, your stop loss here will double down the amount of risks you're taking in the market, right? This is the correct way to put your stop loss below this low. And assume that whenever your trade hits your stop loss here, your analysis has been invalidated. You should wait for another signal to enter into a trade. Here are some examples on the chart here. We have this high and we have this low, and we have the shift that brought a shift of market structure, right? This low causes the shift of market structure, and then we have price retrace into this imbalance, right? Price retrace into this imbalance. This is in connection, or this also should be together with your top-down analysis from your higher time frame. I'm just giving a strategy of putting your stop loss whenever you take your trade on whatever time frame you're taking your trade, right? That doesn't mean I'm giving you a trade signal, only give you a clue of using stop loss. So let's assume you enter this trade inside this imbalance, right? Let's assume you enter this trade inside this imbalance. Where should you place your stop loss? The answer is above this high that causes the shift from market structure. If you notice, we have this high and the low, we have this high, and it was from this high that we finally have a shift of market structure, right? So to place your stop loss above this high, not this particular high, and as this will double your losses, right? Placing your stop loss above this particular high will make you to have double stop loss. This is about 47 pips, right? 47 pips. And then here is about uh, 27 pips, right? 27 pips stop loss. So you see how much you are able to reduce by placing appropriate stop loss. Whenever your trade hit your stop loss here at this high, it is expected that this trade has been invalidated. There's no need of allowing your trade to trend until it reach your stop loss, which is a far behind or far below or above your trade. This would make you to have unnecessary losses and the end product will be blowing off account. The next thing is after placing your appropriate stop loss, the next question in the mind of traders is how can I modify my stop loss, especially when the trade is going in my favor? How can I modify it to break even? The answer is very correct. For a trader that entered this trade inside this imbalance, for a trader that entered this trade inside this imbalance, is it good to modify your stop loss after this move here? Right? The answer is no. Why? Because there is no break of market structure. Price only pick liquidity below this equal low and then retraces back. So your stop loss should be at the initial position, right? Then wait for price to have a significant market structure break before you consider entering, before you consider modifying your stop loss to break even. You can see immediately price took out liquidity above below this low, it went to sweep liquidity above the high again. Let's assume you've modified your stop loss to break even. You would have been out on the trade by now. You would have been out of the trade by now. And immediately and aggressively, the trade retraces and sweep liquidity. I mean, and causes a market structural break with this aggressive candle. It causes a market structural break. At this point, you can place your stop loss at break even and continue riding on the trade. This is number 2 example of how to place your stop loss on the chart. Right, we have this low and a high and a high, and we have this low again, and we finally have a market structural break, right? Which causes a market structure shift. Remember, at this point, it is this particular high that causes all this move. It is this particular high that causes all this move. Why did I took this trade? Immediately it retraces into this demand zone. It is because number one, this is the significant high, that low that causes all this move, including the market structure shift. Number two, we've been leaving a blueprint of liquidity along the way. We've been leaving what is called a trend line liquidity. A trend line liquidity. Can you see it? Can you see it? Or it can be referred to as a diagonal liquidity also. Diagonal liquidity, right? Can you see this? Can you see this? The low touching the trend line, this low touching the trend line almost 3 times. This is a trend line liquidity. Immediately price came back aggressively. Can you see how aggressive price was with a great momentum to sweep this trend line liquidity and retrace into this demand zone? Took this trade. Where is the best place to put your stop loss? The answer is already there, below this low that causes all this move, right? Then, as I told you, some traders will want to put their stop loss 2, 3, 4, 5 pips below the low. That is also good, but don't double down your losses. If that is your method of putting your stop loss, you should put it inside your trading plan and know how to balance it, because some bad days may come where you may take a lot of losing space in the market, and it is your trade management that will help you. Just like I told you earlier, the difference between profitable and unprofitable traders, aside other things, one of it is your ability to minimize your losses and maximize your profit. So if you like this video, hit the like button, ensure to follow me for more content, and I wish you all the best, guys.